Hi, I'm Andrew Berman from the Mortgage News Network, coming to you from the M&N Studios here in New York. You're watching a video press release, and with me today, I've got Robert Walker, who's Vice President of Sales for Veros Real Estate Solutions. Robert, thank you so much for joining us.
Glad to be here, Andrew.
So today we're here to discuss the importance of property-level AVM suitability in mortgage lending. So listen, Robert, you talk a lot about AVM suitability at the property level. What do you mean by that?
I think it's really important because it was really the notion of property level suitability was really stated in a public arena by a well-known banking regulator. And he just said to the audience, which was lenders and AVM developers at the time, just tell me if the subject property is a viable candidate for an AVM, yes or no. So if yes, what that really means is the subject property, if it's highly suitable, it will be, we can imagine a cookie cutter neighborhood, one where lots of subdivisions where the property was built within a few years of each other, where the gross living area is within a couple hundred square feet of each other. And that's highly AVM suitable. The opposite is also true. In other words, an unsuitable property is one that's, maybe 1,500 square feet with a 4-acre lot where half-acre lots are the norm. So how much of a premium would one ascribe to that big lot premium? It's a difficult thing. That makes it difficult for an AVM. And so if we can just use AVMs where they're suited for, where there's a good deal of data and making the property suitable, then I think all stakeholders and AVM users will be better served.
Fantastic. So, Robert, as an AVM user, what are the implications of property level suitability for me?
The big implication, Andrew, is that you really you're going to get higher quality answers if we can screen out those properties that are unsuitable. We go back to that example of the 1,500 square foot house on 4 acres. That's not a property that's going to get you a highly reliable AVM answer. And so the whole notion being is let's go with properties that are suitable. And really this gets to the idea that it's perhaps a better place to start your AVM journey than with the traditional county level lookup table based cascade, which is the norm in our industry, frankly, today, Andrew.
So Robert, can you talk to us a little bit about how to apply AVM suitability in the mortgage marketplace and really why it's important to them?
Well, Andrew, it really works this way. In other words, today, the vast majority of AVM users are going to employ what they call a cascade. And really what that means, Andrew, it's a county level lookup table where based on testing, AVM number 1 is first, AVM number 2 is second, so on and so forth. But AVMs have evolved to such a degree, Andrew, that one would ask the question, if AVM number 1 didn't provide a suitable answer for whatever reason, the probability that AVM number 2 is going to provide an incrementally better or materially better answer is slim. So we think the better way to go, Andrew, is to ask the rhetorical question up front, is this property a viable candidate for an AVM utilization, yes or no? And if so, go that route. But if it's not a viable suited candidate, like that property with the 4-acre lot, then by all means, let's send that to a higher level of valuation due diligence. And many times that manifests itself with desktop appraisals and AMCs and all those kinds of things.
Fantastic. So Robert, what business process does Vero Precision replace, and why is it better?
Well, Andrew, the really thing it replaces, as I alluded to a minute ago, the vast majority of AVMs are used in home equity lending. And within that, Andrew, they use these cascade, which are lookup tables. And again, it goes back to testing. And the interesting aspect of that, which cascades were really developed, Andrew, in the early 2000s as a means to increase hit rate or the geographic coverage of AVMs. You might have had 4 or 5 AVMs back in those early days. Some AVMs may have had geographic areas where they were better than others. And so it made sense to kind of put these together on a piecemeal basis for coverage. That makes a ton of sense.
Sure.
Today in 2019, we've got a handful of AVMs, but they're all national in scope, Andrew, and they're all using data that comes from essentially, generically, at least coming from the same central sources. And so you have to ask yourself a question, if an AVM didn't really value the property to your satisfaction, an AVM number 1, again, what makes you think AVM number 2 is going to do any better? So we think it makes a whole lot more sense to ask the question up front, is the subject property a viable candidate for an AVM? If yes, go that direction. And if no, go that direction.
Yeah, fantastic. So how can lenders leverage Vero Precision, and what are benefits are associated with that?
Absolutely, Andrew. In other words, really what the benefits that AVMs really deliver big time is a speed of valuation and cost. And when you use them on suitable properties, they can deliver a high level of accuracy. So that's what our value proposition is for Vero Precision, to develop all those, because we're first screening for the suitable property, and then we're running 2 AVMs simultaneously, not in sequence, Andrew, but simultaneously, and having developed an AI program that looks at those 2 values, and at the property level, Andrew, determines what value is most accurate for that subject property. In other words, the giant leap forward here is we're not talking anything about county level lookup tables. Right. We're talking about, is the subject property a candidate for an AVM? And if so, if it is, let's give it the best value we can, having triangulated to that value through 2 separate and distinct AVMs.
Fantastic. Listen, sounds like a great process to give lenders a more accurate depiction of value. So what are the distribution models for the product?
Andrew, as you can imagine, when we talk about AVM suitability, there's some properties that will be deemed not a good AVM candidate, right? Yeah. And so we partner a great deal with our AMC distributor partners. Predominantly, Veros is distributed through AMCs, and they provide a tremendous value add, Andrew, in the sense that when the property is not deemed suitable for an AVM, the process is seamless, and it goes directly to the lender's product of choice, with that AMC. So let's say it could be a desktop value. It could be an evaluation. It could be lots of things, and it could even be a broker price opinion in some cases, I suppose. But whatever that product is, Andrew, it's seamless, and there's no level of consternation of, oh my goodness, the AVM passed through the lookup tables, but I'm not sure I trust this one. What do I do? So there's no level of time or energy wasted on those kinds of decisions, Andrew. It's straightforward and fluid.
That's fantastic. Great. So listen, in closing, is there anything else you want to mention before we close this out?
Andrew, I think I really go back to the point we talked about in the earliest part of this video press release, which is the whole notion that end users of AVMs need to think about now. Is the subject property suitable for an AVM? If yes, then a precision product is a very viable candidate. Because as distinguished from the way the industry uses and consumes AVMs now, with property level lookup tables and cascades, that really doesn't address, is an AVM the right tool, and could send you down the wrong path some amount of the time, Andrew. So I think it's all about time and efficiency, and our stakeholders, lenders and AMCs want to make this process efficient for the home equity borrower. And in the end, that's all it's about, getting the right answer for the borrower. And when their AVMs are the right tool for the borrower, and with a time and their time and cost efficiencies, then by all means, let's use them. But if they're not the right tool, let's avoid them, and let's go to plan B. And that's what our AMCs really help us do a great deal.
Fantastic. Thank you so much for taking the time to meet with us.
Thanks, Andrew.
And I'm Andrew Berman from the Mortgage News Network. Thank you for watching.